you doing? How you doing? A little bit tardy. I'm a little bit tardy, but hey, the adventures of Super Dad don't stop. While everybody come in, let's go ahead and get the pleasantries out of the way, shall we? Good evening. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. And if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. And I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits, hanging out with me, hanging out with my homeboy Spidey back there by the computer, my sweetie over there in the corner, the couch over there, anybody who get tired of me running my yap. Hey, man, if you don't know who I am, if you by any chance you don't know who I am, this your first time pulling up the Tim's Tidbits, this your first time tuning into the YouTube channel, my name is Timothy Lee Rogers C. I get on Al Gore's internet every single day, and I talk about the price action dealing with the S&P 500, be it the futures, be it the SPY, be it the SPX. That's all I do. Why? Because that's all I trade. I stick with the market. I don't want to trade individual stocks. I don't want to trade the NASDAQ. I just stick with the S&P 500. S&P 500 will get you to glory, if I do say so myself. It might not be as fancy as your NVIDIAs and your Teslas and some of your small cap high flyers and your small cap tankers. May not be as sexy as that stuff, but it'll get you to glory. It will get you to glory. Had a nice conversation back and forth with one of my young brothers, talking about he want to get into it and all of that. And I'm like, the poor world has been so confused by Al Gore's internet. Everybody think it's like they see these people on Al Gore's internet talking about, I made 20,000 a day. I made this today. They don't understand that these people are getting a sizable amount of money from people just like you, making six figures a month, teaching people like you how to trade. So, of course, when they decide to take a trade, they're going to make huge amounts of money. If somebody was bringing in six figures a month, right? And you could just take that six figures and put it into an account and then trade with a sensible risk tolerance, you too could make $20 and $30 and $50,000 a day. But Al Gore's internet got people thinking like basic people, everyday people who work a 9 to 5 can just take $200 and flip it and turn it into 20,000 in 1 week. But that's not why I'm here. That's not why I'm here this evening. This evening, I'm here to talk about what? The price action. And before we get into that, I want to have do a little drill. I want to do a little drill. Right? I want to do a drill. Y'all can see it up there. Let me see if I go full screen, what happened? Okay, but you can see the bottom. You can see the bottom. I don't want you to be able to see any of that. I don't want you to be able to see that. I don't want you to be able to see the bottom. And I don't want you to be able to see the top. Oh, okay, let me do that. I can stick that out of the screen. I could put that out of the screen so you can't see that. And I can stretch this out of the screen So you can't see that. There you go. Yes, I like that. I like that. Now let me put this back over here where I can see this. Right there. And then let me move this over so you can't see the ticker name. Nah, I don't want to do it. Go back to what I did here. Yes, that like that. Okay. There you go. That get down there. Every time I move that, it keep bringing that in. Okay. Now you can't see the time frame on the bottom. You can't see that. Okay. Now there you go. Okay. All right. Now that I got that all together, I think I do. Let's go to the. Hey, where'd y'all go? Why does it keep doing that? Okay. I'm about to get frustrated. Why can't I? Oh my God. No matter how much I shrink this, I can't see the. Okay, there it is. Like, no matter how much I shrink this, I can't see the freaking chat. Okay. Dang. Everyone got badge colors. I'm colorless. I'm finna join so I can get down with the color. Man, that is not necessary. So you done change the name. I can't remember what the name used to be. You done change the name. It wasn't Mendez. That it ain't meant. That's gonna drive me crazy. Ruben. That's it. Ruben. That's it. I remember now. Thank you. VIP sections. Couch. Hello. Okay. I want to, before we get into it, well, while we transfer over to this right here, can y'all please let me know in the chat, right? Can like what I did today as far as like talking through the price section, not the renting, not the renting and like getting off into the other stuff, but like once I got into going through the price section, was that helpful to you? You know what I'm saying? And just be honest. If it wasn't helpful, just say no. You know what I'm saying? If you already knew that stuff, if you already know how to do that stuff, just say no, right? But was it helpful to you? Be honest. You know what I'm saying? This ain't about, you know what I'm saying, making me feel good, stroking my ego. This ain't no, if I made you money, put one in the chat. Ain't none of that. This real deal Holyfield, because I try to, like I say, it's new faces coming around, new people tapping in. I don't, you know what I'm saying? I don't know where everybody is as far as they skill level yet. So I try to add some type of value to it in the midst of me renting. And what it be like, whatever come to my head is kind of like, what's the word I'm looking for? Extemporaneous. I think that's the word I'm looking for. Extemporaneous. Now I got to check that word to see if that's the word I want to say. Extemporaneous. I don't know how to spell it. And I'm on IG. Extemporaneous. Extemporaneous. Probably wrong. Extemporaneously, extemporaneous speak, extemporaneous definition, right? Spoken and done without preparation. That's the word I wanted. That's that Broward County education for you, baby. Look at that. That's that Broward County education for you. For the haters who don't want, let me see how I say it. And I said it right. And I said, hold on, let me share the screen because it's some haters. It's some haters and they licky racers. It's some haters and they licky racers. Extemporaneous. Let me share the screen. So, hey, hold on.
Extemporaneous.
Say it again.
Extemporaneous.
And what does extemporaneous mean? Spoken or done without preparation, aka freestyling. We used to call it freestyling when I was growing up. Extemporaneous. That's that Broward County education for you. Hear me. And that was for, I ain't gonna call no names. I ain't gonna call no names. I appreciate that, Michelle and Margot. I appreciate that. All I need is one. If I help somebody, my job is done. What the comedian name was, and I done did my job. Is that Larry the Cable Guy that used to say that? I done did my job. Okay, this is what I want to do, right? Let's have a drill. That dang near explains today's price action. Extemporaneous. Let's have a drill, right? Extemporaneous on all time frames, right? Let's have a drill. Looking at this chart right here, right? If you just looked at this chart, just looking at this chart right now, right? If you can honestly say, I know what this ticker is just by looking at this chart, right? Just looking at it just like this right here. If you can honestly say, I know what that ticker is, put a 1 in the chat. If you look at that chart and you can honestly say you have no clue what that ticker is, put a 2 in the chat, right? Give you 15 seconds. Has that been 15 seconds? All you gotta do is type a 1 or a 2. All you gotta do is type a 1 or a 2. Okay, we got a 1, we got a 2, we got a eraser liquor, we got a 1, we got a 2, we got a 1. Okay. Now, right? Looking at the chart, just boom, looking at exactly what you see right now. What time frame is it? If you just look at this chart and you can honestly say, I know exactly what time frame that is just by looking at what I see right now, put a 1 in the chat. If you can honestly say, I don't know what time frame that is, I just see a bunch of candles, put a 2 in the chat. 15 seconds. See a 2. I see a eraser liquor. I see a 2. I see a 1, an eraser liquor, a 1, a 1, a 1. one possibly SPY daily, right? Okay, y'all know the SPY very well because we look at it every single day. Now, what you want to do, well, this is what little Timmy Rogers want to do, right? When you're just looking at the price action, right? When you're just looking at the price action, you don't want to focus so much on what the time frame is, right? You don't want to focus so much on what the time frame is when you're just looking at the price action and trying to see what the draw on liquidity is. You don't want to focus so much on what time frame that is as opposed to where is price trying to get to when you're looking for the draw on liquidity, right? Right? If you're a note-taking type person and you want to take notes and think about things in the way that little Timmy Rogers think about it in, feel free. But listen to everything I'm saying first, right? You want to get into the habit of not worrying about what time frame this is when you're trying to identify the draw on liquidity, right? And the reason why I'm saying that, I know you're probably thinking, Tim, that makes no freaking sense. What about bias? I ain't talking about bias, right? Tim, that don't make no sense. What about narrative? I ain't talking about narrative. I'm talking about just training yourself to identify the draw on liquidity, right? Just training yourself to identify the draw on liquidity. Because like Michelle said, right? Price is fractal. How you going to use the same numbers for both questions? Because get out of the way. Because I knew where the chat stopped at. I knew where it stopped at. And I gave another 15 seconds. Delete. Yes, price is fractal. Right? Right? Price is fractal. And again, look at Michelle popping up with the gems. Once you can read, what in the world? Get off my screen, Michelle. Get off my screen. I don't know what you were trying to say right now. I read typo. I read typo fluently, but I don't know what you were saying right now. Oh, please don't tell me that's another shorthand. Please don't tell me that's another shorthand for candles. Please don't tell me that's shorthand for candles. Now, Ruben, how you know that was candles? Please don't tell me that's shorthand for candles. Anyway, what was I saying? What was I saying? Oh, price is fractal. Thank you, Michelle. Once you can read the candles, it works on all time frames. Thank you, Michelle. So I'm not talking about narrative. I'm not talking about bias. I'm just talking about learning how to identify the most highly probable draw on liquidity, right? Learning to identify the most highly probable draw on liquidity, right? So it don't matter what, because I hear people all the time say when I'm looking at charts, they be like, what time frame is that? Right? And if I don't draw specific attention to the time frame, right? When I'm talking about something, the time frame ain't important right now. The only time you're going to hear me drawing specific attention to a time frame is when we got our bias we got our higher time frame draw on liquidity, then I'll bring focus to these are 15-minute candles. These are 1-minute candles, because 9 times out of 10, right, my higher time frame draw on liquidity is going to be a daily draw, right? And then I'm going to have intraday draws, right? Not draws, intraday draws, right? Going, I'm looking for the intraday draws on liquidity because price is fractal. The same, like it, let's just pretend like nobody knew what time frame this was, right? Just imagine nobody knew what time frame this was, right? We can look at this and we can identify swing highs, we can identify swing lows, right? We can identify this right here is a long-term swing high. This down here is a long-term swing low. How can we identify this, right? Because this is the highest high and the lowest low in this entire piece of price action, right? We done went up and down many times in between this high and this low, right? So looking at this entire piece of price action right here, we can identify this right here as the long-term high, and we can identify this down here as the long-term low, right? So we can identify this right here would be the buy side, and this down here would be the sell side for the overall piece of price action, right? And then we can go through and dissect like what's going on, right? We can go through and dissect what's going on. Does it have to always get to the buy side or the sell side to be profitable? No, it don't. Because imagine when we came down here and we made this low and we started coming back up, right? Right here at this point, right here, right? At this point, right here on this piece of price leg right there, right? I'll go ahead and put this back so you can see everything. Since we ain't got to try to play the guessing game, we already know it's daily candles, but we ignoring all of that, right? So when we come here, so right here on this piece of price leg right there, right? If you wanted to, you can immediately say that that's the draw on liquidity if you wanted to, right? If this area of price is the price that you want to look at, right? You can immediately say that's the draw on liquidity right there, right? Why can you immediately say that? Because we came down, right? We've come down and we can't see what's farther to the left over there, right? But we've come down, we've taken out sell side up under these lows right here, right? And then we got a pang-out. Well, we broke this swing high right here, creating a breaking market structure right there, right? We got another one right here. So you really could have did it here, but that wasn't really like an aggressive move. But this right here, bang, that's a nice little move right there, giving us a breaking market structure right here, right? So you can immediately say, where did that go? Oh, that'll disappear if you do that. I don't know what I just did, but it disappeared. It disappeared. I don't know what I just did, but it disappeared. Y'all don't mind me. right? Gave us a break in market structure right there. So you can immediately say, that's the draw on liquidity. Does it have to get there to be profitable? No. It don't have to get there to be profitable, right? You just want to wait for the market to show you that it's interested in going after that liquidity. How does the market show you that it's interested at going after that liquidity, right? It's going to take out some opposite liquidity, right? So if this is buy side, right, it's going to take out some sell side, right? And then it's going to give you an aggressive move, making a break in market structure right here, right? So there, like I say, it could have been right here, but this right here, that's not aggressive enough for my taste, but it qualifies because we came up here and we took out this swing high right here. We took sell side and then we created a swing high there and we took out that swing high. So that qualifies. If that's your, you know what I'm saying, your qualification or your criteria, y'all still ain't told me where that criteria come from, then you can use that. But me personally, I'm looking for the pay out. I want it to go, right? So you can immediately say that's the draw on liquidity, right? And then once you got your draw on liquidity, boom, that's my draw on liquidity. I'm gonna make it green. No, I'm gonna make it I'm gonna leave it blue. Now I'm gonna make it burgundy. That burgundy. Now that burgundy don't look right. Why that burgundy don't look burgundy? What's going on with that? I don't like that. Okay. Right. So once the market tips his hand that is interested in going toward that opposing liquidity, right? Remember, it's going to take out, like if we're coming down, right? So it's going to take out some liquidity and then it's going to give you the pink out, right? Taking out a swing high or swing low, right? It's going to give you the pink out. This is the market showing you I'm ready to go that way. Like I say, if this one right, this breaking structure right there floats your boat, go in there. But me, I look for more aggressive moves, right? I tend to miss more trades like that, but I'm patient, right? So that's one thing. Right now, once you've got your top and your bottom, this your external liquidity, right? Your buy side and your sell side, right? Then, now that you know that, you say, okay, this is the draw, right? Where's the... right? You say that's the draw. That's an eyeball. For anybody who don't know what it is. Can I make it bigger? Yes, I can. That's the draw right there. Right? That's the draw on liquidity. Right? Now that you got your external draw on your liquidity, You say, okay, we got a breaking market structure to the upside. This is my draw. You can pick anything you want as the draw, but I'm picking the top and the bottom because this is the entire range. This is the highest high and the lowest low in this fractal of price right here. We ain't talking about bias. We ain't talking about nothing. We just talk about how to identify the draw on liquidity, right? So now that you've got your top and your bottom, right? Then you start to look for internal liquidity, right? You look for internal liquidity in the form of highs, lows, fair value gaps, liquidity voids. You know what I'm saying? You're looking for internal liquidity, right? Stuff like that. Highs, lows, those are your liquidity pools, your fair value gaps, your liquidity voids, those are imbalances. Those are places that price has to, the algo has to rebalance imbalances, and they hunt liquidity above and below highs, and then they got reference points. They drop breadcrumbs along the way to let them know when to stop and when not, and when to go, right? So then you just start looking for internal liquidity, stuff that the algo will likely attack, right? So this is your stretch goal, right? So you want to start setting like places where you haven't attacked yet. And with your pang out leg right here, you notice we already came up and we took out this high. That high has been taken out, right? So then you be like, okay, what's the next high that we haven't taken out on the way to our destination, right? So then you be like, okay, there's a high right over here that we haven't taken out. Boom, right? That's a high over there we haven't taken out. Let's make this smaller and green. We're going to make it smaller and green, right? That's some internal buy-side liquidity, right? That we can attack, right? I ain't going to go through all the, we got a full liquidity void there. We got a full liquidity void here. We got a full liquidity void there, combined with a fair value gap there. We got all kind of stuff, right? Fair value gap. We got a bunch of PD arrays now. So you're looking at the PD arrays. You trying to figure out what's the draw on liquidity, regardless of what time frame it is. You want to train your eye to look for what's the draw on liquidity right now. Okay, Tim, now that we got that from here, now what if you come in and it looks just like this right here, right? You come in and look just like how we looking at right now. Still, that's your buy side, that's your sell side. That's the highest low and the highest high and the lowest low in this full piece of price action, right? So then what do? You want to start at the left and read to the right and see what price has done all the way up until you get over here to the right-hand side, right? So it's going to, since you already know the high and the low and you're trading through this right here, right? You want to look at price and see what price did to determine what was the most highly probable draw on liquidity, right? So what did we do when we were over here, right? We saw that price had heavy distribution to the upside. Price took out sell side, then boom, took off to the upside, and then that's how we determined this is the draw on liquidity, right? So we look to the left to determine what's the most highly probable move, right? Same thing when you don't know what's coming next, because ain't nothing else over there. That's the unknown. That's the future, right? That's the unknown. Going back, doing it when you already know the future and really looking through the candles and seeing what price did, this right here helps you trust when you're doing it over here and you don't know the future, right? Ain't no guarantee that this gonna play out the same, but doing it over here helps you learn to trust your eye, right? So looking at what price has done, we look to the left, right? So we said over here, we said, hey, once we got here, we was like, this is the draw. Where'd my eyeball go? Eyeball, where are you, eyeball? There you go. Okay. We said this was the draw right there, right? So do, right? We come up here, right? Once we get up here, we see what come over here. We came up, took out buy side, came down, discount PD array, support and price, right? Came up, took out buy side, choppy, take out buy side, choppy, took out buy side, came down, discount PD arrays, support and price, right? Because we went back up, right? So we came up, we still even here, right? Even here, we coming up, taking out short-term buy side, discount PD arrays, support and price, right? Even there, took out short-term buy side, discount PD array, support and price, right? So the market is still in a buy. In this little piece right here, right? This little piece right there, we came here and we dropped down, right? Looking like we finna to die. We dropped down and then we went into a consolidation, right? But then what did the market do? It said, nah, I ain't finna die. Boop, popped up, came out of here. If this don't fit your criteria, it qualify. But if don't fit your criteria, you want the pang out, right? There's your pang out, right? We dropped quickly, then we consolidated, and then the market tipped his hand. Boop, popped up, came back down, discount PD array, support and price, right? Now, we come over here. We've taken out buy side all the way up to this first drop from the beginning, right? We've taken out buy side all the way back to this first order block right here, all the way at the beginning of the drop, right? So we consolidated right here, right? Once we consolidated here, what did price do? Pang out to the downside, right? All through this area here, right? All through this area here, price, like, see how price dropped out here and then started consolidating and looking like we was fun to go. It gave us a nice little move there. Gave us a nice little move. That's a pang out, right? And then price did what? Started consolidating, right? And then it gave us a pang out to the upside. So when the price consolidates, you wait for the market to tip its hand, right? So right here, price consolidated, went to the bottom, right? Unfortunately, it ain't give no good retracement to come back in or nothing like that. It happens sometime, right? Price got right here, consolidated, pang out to the upside, gave the retracement back, right? When we got over here in this consolidation, what did price do? Pang out to the downside, gave retracement back, right? And then dropped off. Now, looking at where we are now, right? Looking at what we already talked about over here. At this point, when you say, what's the draw on liquidity? Is it still up here? Right? If you still got your conviction for back over here, so be it. Stick with it. Right? But in little Timmy Rogers' world, right here, this move right here, right there, that made me say the draw on liquidity is now here. Right? Does it have to get there to be profitable? No, it don't. It don't have to get there to be profitable. Matter of fact, it wasn't even that low yet. It was actually over here when I said that. But that's the bottom right there. Does it have to get here to be profitable? No, it doesn't. Right? And here's the proof of that, because we talked about this in real time. So boom, you go up there, you come down there. That's the draw liquidity now in my mind, right? Does it negate this being the draw from up there? No, it doesn't. No, it doesn't. You don't have to abandon it, you know what I'm saying, just because somebody got a difference in opinion. Because if you go here and you go to the top there, we've just gotten back to equilibrium. And how would you know that was equilibrium, right, without even running them fibs? This little area right here, that little area right there, where does price like to consolidate at? Right there. Price likes to consolidate in equilibrium. So we've just gotten back to equilibrium, right? It can still reverse and go back up and take out that. But we ain't talking about narrative. We ain't talking about bias. We just talking about trying to learn how to identify the most likely draw on liquidity, right? So now that price move right there made me say, hey, that's the new draw on liquidity, right? Once we did that, we got us a breaking market structure there, but we're just going to use this one, right? We got us a breaking market structure right here. We're just using this one, right? I think we made it red last time. I don't know. I can't remember, right? We had a breaking market structure there, right? And then coming down, where is the internal liquidity? You got liquidity there. I know we made this green. I think yep. We got you got internal liquidity there. You definitely got internal liquidity here. Right? Who can explain to me why I say you definitely got liquidity right there? Right? Somebody put it in the chat if they think I know, they know why I said you definitely got liquidity right here up under this low right there. Who think they understand why I say it's definitely liquidity under this low right here, right? And let me give you some clues. Let me give you some clues while you're thinking about it. Let me give you some clues while you're thinking about it. If y'all ain't got it by now with me doing all this right here, get off my live. Get off my live. That's true too. That's true too. That's true too. That's true too. All of that's true. That's not so true. Right? What all them little boxes I drew right there. What am I drawing out right there? What am I drawing out right there? Let me help y'all out. There you go. There you go. There you go. Market maker sell model. Right? Market maker sell model. Now, again, you do not have to complete the sell model to be profitable. There's no guarantee that you're always going to rate the lows or the highs above or below the initial consolidation. There's no guarantee that you're going to do that. But when you can readily identify other pieces of the puzzle that can help you identify draws on liquidity, right? Now, that's one That's one reason why I like to learn everything. I have a question. Since we are at equilibrium, does that mean we may start consolidating? It could very well. It could very well mean that. It could very well mean that, right? What we can do, since we're back at equilibrium, we could very well form another box right there before taking out that buy side. I mean, that sell side, right? Taking out that sell side right there. Before taking out that sell side, we can make another box over here, right? Now, don't press me on what ICT call all these boxes. You know what I'm saying? He got like accumulation, distribution, smart money reversal, reaccumulation, redistribution, all kind of stuff. I don't know the names of these boxes, right? I just could see it now. Shout out the nephew Corny. I could see it now because Corny gave me my aha moment. Now, back to what we was talking about, right? We just trying to identify the draw on liquidity, right? We're not talking about bias. We're not talking about narrative. We're not talking, we're just trying to learn how to identify the draw on liquidity, right? Now that we've seen how to do it by looking back, aka back testing or whatever you want to call it. And now we've seen how to do it when we don't know what's to come next, right? We don't know what's come next. And I mean, I know I do it like almost every week. Sometimes I do it every day when I be like, hey, I expect price to come back up to this volume imbalance, this whatever, and then come down just like when we was on the ES, whenever this was over here, when we was coming down there. And I was like, now that I know that this is a new week opening gap, right there, I was like, now that I know that this right here is a new week opening gap, I definitely expect price to come back to that and then sell down, taking out whatever low we make, coming down and eventually taking out the January low. And I would suspect December low being the actual draw on liquidity. Why did I suspect that? Because we have a market maker sell model in the making. This is the initial consolidation, accumulation of whatever it is, distribution. This was the smart money reversal right here. We had the smart money reversal right there because you can't smart money reversal, low, I mean high probability short, whatever. It's different things he got in there because this is the reversal right there because we come down, we broke market structure there. This was the high probability short. I think it's something called a high probability short in there. Another reaccumulation, redistribution, something over here. And now we drop down over there, right? We drop down over there. Now, and as you see, shout out Michelle Tucker. You see right here on this market maker sell model, Michelle, when we got back to equilibrium, we did consolidate for a little bit. You see right there? And when I said we could very well do so, we did consolidate over here on this one here. When we went up, when we got back to equilibrium, we consolidated, we came up, hit that new week opening gap in volume imbalance, filled in that SIBI, and then dropped it like it was hot. Right? So there you go. You can reconsolidate again once you get back there, right? You never know. Because we don't know the future. We just looking at the most highly probable scenarios, right? Now that we done went through all that and we 50 minutes in, right? We're gonna go back to the SPY where we was at. We was hanging out. I hit SPX. We're gonna go back to the SPY where we was at, where we got all our drawings and stuff right now. So we've done it. Looking back, we've done it where we can't see the future. Now, this is how you want to build your narrative and then look for your draw on the lower time frames, right? Now we're putting the pieces, all the pieces together, right? So I already got my TDA set up there. Boom, right? So when you're looking at building your narrative, right? So these are daily candles, right? These are daily candles. So I like to go all the way up to the month. You can go up to the weekly. Some people go to the weekly. Some people just do it on a daily. I like to go up to the month to see what price has done on the monthly level, right? So once I see what price has done on the monthly level, what I like to do on the month, I start at the monthly level and I look for the nearest monthly low we haven't attacked yet, and I look for the nearest monthly high we haven't attacked yet, and that's my monthly liquidities, right? That's my buy side, that's my sell side, right? Because I want to put it in a box. I want to put it in a box so I can determine if I'm in a premium or a discount in that dealing range, right? So, and there's no other PD arrays I want to mark. We just talked about drawing liquidity right now, right? So I mark out the nearest monthly high and the nearest monthly low that price hasn't attacked yet, right? Not counting the month that we in. So that's February and January, right? So then I drop down to a weekly. I'm billing my bias. I'm billing my bias, right? This how I build my bias, right? So then I get to the weekly, right? And I already moved this right here because we just took this out. Whenever we take out my bottom or my top, I adjust the bottom or the top on the on the weekly box. And then if I take out the monthly, I'll adjust it, right? So looking at this right here, I just moved this down to here, right? And this is this week, right? Yesterday when I was doing this was last week. So I had last week's high and low because we were starting a new week, and this is the closest high and low to where price was at the time, right? So now that we've broken out the bottom of the box, I just moved the weekly low down here to today's low. We only had one day, so that's the lowest it's been this week, and we still ain't take out the top side from there, right? So we've attacked the sell side liquidity there, right? So boom, now that we've attacked the sell side liquidity there, that's our monthly box low. I ain't gonna worry about putting that that weekly low down here because that's my monthly low, right? The next weekly candle is below my monthly low, so I'm just using where we are right now until we break out this monthly bottom, and then I could pick a new low or whatever, right? So boom, I'm building my just want to see the high and the low, right? The high and the low, right? Go down to the daily. Boom. Now, when I get to the daily, right, this is where I form my bias for the draw on liquidity at the daily. I form my bias for the draw on liquidity at the daily, right? So looking at where we are right now, right? Did I delete my eyeball? Did I delete the eyeball again? Man, why do I keep deleting the eyeball? Come here, eye. Boom. That's the draw, right? And for anybody who don't understand why I say that's the draw, right, is because, right, when we came up here, we took out this buy side, we got a pang-out. Pang-out right there. We got the breaking market structure right there, right? We got the pang-out at the breaking market structure after taking out buy side liquidity, and we're selling down, right? Right now, this is the draw on liquidity for me. Two reasons why. That's the first reason, because the market showed its hand that it wants to go down. The second reason is we are a stone's throw away from taking out this. And matter of fact, you can just put it over there if you want to. I had it here because that's the month. That's the closest month to where price was. This is December, right? Since the December low is the lowest low in the consolidation starting this market maker sell model, it's fine to put it right there. Matter of fact, when I was on live with the gold members and the Black Spiders members, I even said, if you want to use this low, that's fine. But I'm just using this low because that's the closest month. And now I didn't say this with y'all the other day. I jollipies. This is why I said that, because this is the start of the market maker sell model. And if you want to use that low as your draw, that's fine, right? I'm just using it because I do it for the previous month. I mean, the closest month that we haven't attacked yet, right? So now, boom, that's the draw, right? So this is the draw on liquidity. My bias is bearish because my draw on liquidity is to sell side. I have a bearish bias now. Now, here's my daily high and low, right? I like to go all the way down to the 1 hour. You can go to whatever time frame you like, 4 hour, whatever. I like to go down to the 1 hour. And now in the 1 hour, this is when I start to point out my liquidity levels on my intraday that I'm looking for price to attack to support my bearish thesis. And right now we're in the middle of the road on the daily. So I would be just sitting on my hands right now. My daily high is already the first area of liquidity, and my daily low is that's my first buy side. Why? Because that's the closest buy side, that's the closest high to price that we haven't touched yet. And this is the closest low to price that we haven't touched yet. So my daily high and low is already there. I don't have to mark anything else. All I got to do is wait for price to attack one of them and then tell me what it want to do. In the case where my draw on liquidity is down here, right? You're going to hear me say, I want to see us attack this buy side and then come get this sell side. Why? Because this is where I want to go. So I don't want it to take off and go without me. I want to see it attack this buy side, right? Once it attacked the buy side, I'm expecting it to deliver to sell side. And this sell side is a stone's throw away from my draw. So boom, Bob's your uncle. So that's how you identify. That's how I identify the draw on liquidity. I did all that first so that I can go back and say, this is how you tie it into your bias. Hopefully I ain't confused nobody. I've been on here for an hour, 58 minutes, and I yield my time. Michelle, got a question. Yes, the weekend session tonight. The weekend session tonight. Whoa, hold up. We have a volume imbalance, 100 folks on the live and only one like houseway. I don't even see 100 folks. I can't see the likes or the folks, but sometimes the likes don't be populating when you already in. Like my number don't be changing when I'm watching it. I don't know how many people be. It'll change sometime and sometime it don't. I got a question. I have a question. Where does the market maker sell model end? Would it be December's? Yes. For this one, it would be December's low. That would be the market maker sell model and the market maker buy model. It ends below the initial consolidation, right? We look, these are 1 hour candles, right? We're looking at it on 1 hour candles, but it's still the same concept, right? This is the initial consolidation right here, right? We went up, then we came back down, and then now we're my battery dying. Oh, it just ended. I've been on here for an hour. It just ended. Right. So we back at the initial consolidation right here. Yeah, that looked like yes. We back at, that's just a long wick. I thought that is a huge fair value gap right there. Right. So we came back down to that initial consolidation right there. Then we bounced up off of that. And then now, like I say, this looks like the draw. We got news tomorrow. Don't we got news tomorrow? What we got? What's tomorrow? Is tomorrow CPI? What's tomorrow? Let's look and see what's tomorrow. But to answer your question, Michelle, yes, that would be the end of it would be over here, because this is the initial consolidation of the entire um model, right? This, all of this right here is the initial consolidation on the daily time frame, right? So that right there would be the end, but it doesn't have to take out this sell side, right? It don't have to take out that sell side. It can very well stop. It can be like a OTE entry. Let me go to daily candles to make it easier to see, right? You can very well get a OTE entry, right? And this is where being in sync with the algo help out, right? Because let's look at this right here, right? So we came up in here. So just a quick eyeball of this right here, just eyeballing this real quick, like this right here appears to be balanced out, right? We're going to go from this big volume and this big liquidity void right here, from the open of that liquidity void down to there, right? All of that right there seems to be, right, a balanced price range to me. And the reason why I say that is because we traded back and forth all in here, right? And then we came down and stopped right in this area here, around the top half of it, right? The top quarter of this whole section right here. And then we went, pow, right? We took off. And then when we came back down, right? Price stopped right there, right? Stopped right there at the wick of this order block, right? And took off again, right? Whenever price leaves an area like that, it's saying, okay, I just took out sell side or buy side, and then, right, bunch of consolidation. I offered sell side and buy side in this whole area, and then I left in a hurry, right? Kind of tipping his hand. That's a possible balanced price range, right? So now this area down here is balanced out, right? So that's a balanced price range there. So coming from here, you can come from there, right? Since you say, okay, this is a balanced price range, so I don't want to count that part. I just want to, hey, where's my stuff? Oh, there it is over there. I'm going to come from this low because I don't expect price to want to go down there just yet. I'm not that bearish. I'm not ready for it to take out the yearly low. So, hey, where y'all at? Okay. I'm going to go from this low. Get over here. I'm going to go from this low right here because this is a balanced price range, and price has no reason to go down there right now, right? And then if you look, get out of there. Let's put this on OTE, right? Right now, we're in the OTE range. We're actually in the OTE range right now, right? Not saying that price is going to bounce, right? But I was saying all that to say you don't have to take out this December low because we're right in OTE. We're right at an order block. You know what I'm saying? We're right at an order block. We're right at OTE. I believe we're going to come take it out. I would love if we come take it out, right? But we're right at OTE for this piece of the price leg, right? And then if you go down and look at the entire piece of the price leg, this low is right where? Right dead smack on what? Right there. What's that? 374.79. What's the low of that candle right there? Uh-oh. I'm sorry, y'all. Let me put my stuff back up here. Open high title. Okay. Trading appearance. Scale. Where's my pre-market and post-market? Oh, right there. Okay, so boom. The low, this December low is 374.77, right? And the 62% OTE is 374.79. So right there on the OTE, right? So boom. If we came and take out that December low, again, like I always said, came and take out that December low on the SPY, we still are in the range of ICT OTE reversal. Will it do that? I don't know. Don't really care. I traded up, I traded down. But yes, for this market maker sell model right there, the December low would be the end. All this week going to be hot. CPI, PPI, quad, which SP. Oh, yeah. I was going to look at that, but I got sidetracked. If you don't want to worry about bias, a whole bunch of blocks, or Tim being all up in your PD, ready to come over to. If y'all want nobody being all up in your order blocks, all up in your fair value gaps, come on over here to Death Row. Come on over here to Death Row. Oh my goodness. Hey man, that's all I got. Hopefully I helped somebody tonight. I ran my mouth for a really long time. It's been an hour. I just been chilling because my sweetie had took my son to practice for the Powder Puffs volleyball thing. So I just been running my mouth. Again, hopefully I helped somebody. If not, this wasn't for you. It was for that one person I helped. And I done did my job. Hey, if you don't know, if you wasn't on the live this morning, or if you didn't make it to the end, because we went relatively long. If you didn't make it to the end, I would not be doing any live streams tomorrow. I would not be doing any. Hey, look what I was looking at earlier. Can y'all see that? Can y'all see what I was looking at earlier? Look at that. Ooh. I got to show y'all this. If you get queasy, you might not want to look right now. Which one was it? This one. If you get queasy, you might not want to look right now. You've been warned.
Method can reach that deep. They won't get. Must have been.
Watch when he put this cow. Did you see it? Did you see it? He gonna play it back. Oh my God. Golly! Did you see it?
Did you guys see that?
Golly!
Oh,
came out
Jesus.
and then look at the foot. Look at the foot. Hold on. I got to get to the foot. Then look at the foot.
I'm getting problems.
Okay, so it's at this point I realise that she's got an infection. That's me just checking to see whether it's fluid or whether it's solid or what it is. It's fluid, so we need to release it. This is something I hate doing, but she is going to feel so much better from this. It's unreal.
Look at that.
This pus is extremely thick, and look at the amount of it inside her hoof capsule. The pain that this guy must have been in must have been so sore. It's a real pleasure to be able to make her feel much better than she did.
That's not. Yes, sir. Boy, look at him. Hey, what? Hey, I be going down a rabbit hole. I be going down the rabbit hole. Hey man, again, I will not be doing any live streams tomorrow. Me and my sweetie gonna be celebrating our 16th anniversary. 16 wonderful years for me. She put up with me for 16 years, more than 16 years. She put up with me for so many years, but we've been married 16 years. I'm gonna start live streaming again Wednesday, regular schedule Wednesday, 9 o'clock for the overnight price action, 9:30 for the live market watch, then 6:30 p.m. for the price action recap. Again, hopefully I shared something tonight that was helpful to somebody. Y'all know how I like to end it off, man. Do not put off till tomorrow what you can say today. Let your loved ones know that you love them today. Don't just say it, don't just show it. Say it, show it, and confirm it. Speak in their love language so they'll be able to receive that love you're trying to give, right? Don't do it because you want them to reciprocate. Do it because you love them. You say you love them, do it just solely off of that because you love them, right? Do not put up if something ain't right. If you holding a grudge, let it go. Let it go. If you holding a grudge, let it go. Get it right. Fix it now because ain't nobody promised tomorrow. Trust me. I know. You don't want to hold on till a grudge, or you don't want to put off till tomorrow, and then that tomorrow never gets there. That's a pain you don't want to live with, right? Keep on making happy memories with your family, man. Keep on, being good people. Keep on keeping on, man. I want to show y'all this picture that came up on my time, not my timeline, but my memories in my phone, right? It came up in the memories in my phone, and I know y'all probably won't be able to see it. I wish y'all could. Yes, y'all can. Y'all can see it. Get out the way, notifications. Get my face up there. That's my sweetie and Chris back when he was a little whippersnapper. They was getting ready to go to the mummy son dance. They was getting ready to go to the, y'all probably can't even see it. Golly, get it right too. They was getting ready to go to the mummy son dance. Right there. They was in the backyard. I took a picture of them. Right. That popped up on my thing today. Had me in my feelings. Cause now he taller than his mama now. She officially, see how she like a whole head. Get out the way. See how she a whole head and shoulders taller than him? She officially the shortest person in the house now. Anyway, man, I appreciate y'all. Enjoy your family for the rest of the night. Enjoy your dinner. If you haven't eaten already, if you did eat, I'm sorry for the foot. And I'll see y'all Wednesday, man, for the overnight price. Action. Gone.